when you hear futures? What comes to mind when you hear futures? Anybody? Anybody want to try? What comes to mind when you hear futures?
Prediction.
Okay. Somebody said prediction, but please raise your hand next time. Okay. I think I saw somebody. Okay, he writes. He writes. Okay, let's hear you.
Basically, he said prediction, but it has to do with something that's yet to happen.
Beautiful, beautiful. Richard, let's hear you.
Good evening, everybody. I'm Richard from Kano State. But when you hear futures trading, futures, it actually means something that is yet to happen. But if you're coming to, should I stop here or can I go further?
Please go further.
Okay, but in regards to crypto, yeah, it talks about something that is yet to happen, but you now using it to, it's more like under name for futures is more like leverage trading. Yeah.
Okay. You tried. Let's hear Lawrence. Richard, I'll come back to you about what you said about leveraging. So let's hear from Lawrence first. Okay.
All right. Thank you. So I believe that futures trading is about speculating the price movements of assets or cryptocurrencies. And as Richard has said, it gives you leverage in that you can multiply your capital such that it allows you to trade in a way that basically it allows you to trade beyond the capital such that you can now amass more P&L compared to your starting capital.
You can amass more P what?
Like you can have more profit and loss, like
Yeah.
compared to what you had.
Okay. Thank you so much. Richard, you can bring your hand down. I say you've spoken. Let's hear from Kolo. I don't know. I don't think this Kolo, I don't know. I don't think he wants to speak. Okay, so beautiful, beautiful response, everybody. Well, you all got it right. But when we hear futures, as you all said, simply means something that is yet to happen, something in the future. So what does this mean? Actually, it means you're able to predict when you're indulging in a futures market or in a futures trading. You're there to predict something that has not yet happened. That is what you bet your money on. You bet your money on things that are yet to happen, things that you've not seen. So yes, as you said, the future, the prediction, but yes, leveraging is one of the enablers. I will use it as an enabler in futures trading or in the futures market. Leverage on its own has nothing to do with futures trading. Yes, it's an enabler. It's something the brokers and the futures market has provided for you to be able to maximize your profits. And also, if you're in a bad futures decision, you see that your losses will also be maximized, and which will be bad. But then, with or without leverage, you can actually predict the market. So yeah, that's just what I wanted to point out. So even when we talk about futures is actually something we see in commodities, we see in instruments, even forex. You know, I see that forex trading is actually something that we say, okay, it means foreign exchange. Yes, it means foreign exchange. And for what are you exchanging foreignly? You're exchanging currencies. So that's what forex is majorly about. Forex means foreign exchange, and it simply means exchanging different foreign currencies, you know, USD, Canadian dollar, pounds, euro, and the rest of them. But also, it's also a futures trading, because what do we do in forex? Basically, we predict. So yeah, that's very beautiful. Well, I don't really have much to say, as this is an introduction session, but okay, we're going to be talking about spread. I'm just going to share my screen. Yeah, I just want to share my screen to finish up Miko's slide before I continue my own trail of thoughts. So please confirm you can see my screen. Just type I can on the chat box. Okay. Wow. Let's dive right into it. So at any point when you cannot see my screen, somebody should take it upon themselves to unmute and just speak. Okay. So okay. All right. So just refreshing our minds. I think Michael spoke about these things, but let's just go over them again. So there are different types of trading strategies, right? Different types of trading strategies. Now, some people will say, what is your strategy? Some people will say, what is your edge? Well, those things don't have anything to do with the types of trading, right? Probably there was a type of misconception in this note. Please mute your speakers. Probably there was a type of misconception in this note, but your trading strategy has nothing to do with your types of trading. These are just types of trading. We have scalping. Scalpers are majorly people. I'm sure you're taking your notes. So people who feel that this thing is important, yeah. And most of us, I'm sure, already have this knowledge, so why not deem it fit to jot? But yes, scalping is a type of trading. Scalpers usually go from the second time frame to the minute time frame, from 5 minutes to as low as the second time frame. They do their analysis there, they take their entries, and they take their profit. Those are like very, very, very fast traders. They enter into the trade and they just take some pips and they move out of the trade. Speaking of pips, anyway, we'll come into that. So we also have day traders. Now, who are day traders? Day traders are people who maximize the day for their trading activities, right? What does this mean? This simply means that they try to enter into a position and also close that same position between the time frame of one day, right? They do not go to bed or they do not go to sleep with trades open. So those are day traders. And we have swing traders. Swing traders can have a predetermined stop loss and take profit, and they leave their trades to move all the way to the take profit. They do not maintain a discipline of closing their trades between the time frame of a day. They can actually leave their trades for 2 days, 3 days, a week, 2 weeks, provided that it reaches their destination or the point of their prediction. So that's actually who swing traders are. And position traders are also called investors. So those are people who use trading as a type of investment. When they predict the market, they leave it for months, even years, just to be able to capitalize from the massive dump or the massive pump. So they buy very low, sell very high, and they sell very high and buy very low. So that's that. So this is just scalping explained. Scalping is a fast-paced trading style where traders aim to profit from small price movements by executing numerous short-term trades throughout the day. Yes. So what scalpers do is that they execute back to back. You know, I said they trade from the 5 minutes down to the seconds time frame, and those time frame moves very fast. You can actually see movement, you know, on the seconds to the minutes time frame, and they try their best to capitalize from that very fast movement and take numerous trades before the day runs out. So yes, they still maintain. They can do and do and do. They can trade at any time. So scalpers typically hold positions for a few seconds to a few minutes and rely on technical analysis to identify entry and exit points. Their main objective is to grab very small amounts of pips as many times as they can throughout the busiest times of the day. So pips simply are the unit of measurement for currencies. So they can, so just like each a human now, how do we move? I think we move one footstep, Abby, one foot front, another foot, or whatever. So that's how the market moves. The market moves peep after peep, peep after peep. I hope the explanation catches on. So day trading is a style where traders open and close positions within the same trading day. Day traders may use a mix of technical and fundamental analysis. Yes. I don't know if Michael spoke about fundamental analysis, but fundamental analysis is very crucial, you know, in day trading. In trading as a whole, you know, it has to do with news impact and geopolitical events and updates, which directly impact the markets, especially US dollar related news. They have direct impacts on the markets. So just give me 1 second. Okay, sorry about that. I'm back. Okay. So day traders use a mix of technical and fundamental analysis to capitalize on intraday price fluctuations. So you see some day traders, because they know that news is a factor which actually makes the market volatile in
Yeah, we
ways.
can't see your screen.
Oh, okay. So sorry. Let me just share again. My screen be seen now.
Yes, sir.
All right. So I was saying fundamental analysis has to do with news, and news makes markets move in a fast-paced way, which it would not normally move, you know. So yeah. So day traders mostly wait for times like this during high impact news. They just wait, and during that time they take their trades. But it's advisable for you to do your due diligence in your technical analysis, because I will tell you, majorly, some people tell you that, oh, technical analysis is like 20%. Then they will tell you psychology and fundamental analysis is the rest, and da 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 da. But I'm going to tell you that technical analysis is what you need, right? technical analysis is everything. The fundamentals mostly align with the technical analysis. Yes, especially when you're a day trader and you don't just go to the lower time frame to do scalping or confuse your skills in day trading. Okay, so day traders usually pick a side at the big day, acting as their buyers and then finishing the day with either a profit or a loss. These kind of traders do not hold their trades overnight. Yes, day traders do not hold their trade overnight. After they've done the analysis and they decide that, okay, market is going to move up, they wait for a confirmation and engage into a position of buy. And whatever profit they are in, at the end of the day, they close, right? So those are day traders for you. Then swing traders. Swing trading is a style that involves holding position for several days to few weeks, seeking to profit from short to medium term price trends. So swing traders may use a combination of technical and fundamental analysis to identify potential entry and exit points. Same thing as day traders. It's just that swing traders wait till the price gets to their predetermined prediction place. So they wait for price to get to their take profit before they actually close the trade. They're not like day traders that are disciplined to close within a day just so that they can minimize their loss. You know that there are things we call spread, right? So spread is like the difference between your bid and your ask price. I think somebody mentioned that. Yes, somebody mentioned bid and the ask price, meaning that Michael Smith did well to mention that. So that's what spread would be. It's that difference between the bid and the ask price. So the buying and the selling price, the seller and the buyer, the market woman and the customer. So that their bargaining power. No, now this fish, waiting I get to buy this fish now 2-3. The person will get the fish is like, no. I can only sell this fish for 2-7. All those going back and forth. So that's what your spread is. So that spread, what is spread? Spread is actually you can call it manipulation, broker-induced manipulation. You can also call it broker's way of making money. So it is now, spread is like that disagreement between you and your broker, right? Your broker is like, okay, let's take some amount of money from you, and you're like, no, I don't want to give off this money. So the spread is only against you when you are against the direction of the market. So if you know what you're doing, because I mean, this is trading, this is prediction, and we can always be right all the time, right? It is fair to win some and to lose some. So, but what the spread will be is that disagreement between you and your broker. So if you're in the right direction of the trend and of the market movement, you're kind of safe, because mostly when you see spread, when you see spread during the Asian session, you see spread during the time when it's like we sleep, and the period when the market hits overnight, right? That's why the day traders like to close their trade before the end of the day, because once that day ends, you know that trading is kind of like regulated as a 24/5, yes, which means it is 5 days a week. Unlike crypto, that's 247. In crypto now, you don't have things like spread, right? In crypto, you don't have things like spread. But because of market closes, the forex market closes at the end of the day and opens again for a new session to begin. So that period is when the spread usually kicks in, and it could be very devastating, especially on some pairs. Some pairs have higher spread than some. That's why if you go to your MT5, well, I think probably in week 2, we're talking about some tools which you'll be needing for a successful career path in this industry. You'll be needing, because I think Michael has mentioned sport and the rest of them. I don't know if you guys have been given the link to your brokers, both for crypto and for forex. But I believe by week 2, all those things should be incorporated, and then we'll be doing more of practicals. We'll be seeing how the futures market work, how the forex market works, the tools which you used to be trading, analyzing, and so on, so on. So if you go to MT5 is one of the tools majorly used for executing of trades and also analyzing, but mostly executing of trade because of the interface. So you would actually see the spread which each pair has, you know. So that about that. What brought me to spread? I don't know. So swing traders may use a combination of technical and fundamental analysis to define potential entry and exit points. This type of traders can't monitor their charts throughout the day, so they dedicate a couple of hours to analyzing the markets every night to make sound trading decisions. So swing traders can't monitor their charts throughout the day, unlike scalpers and day traders. Anyway, even day traders too can go to work, because they know that, okay, if in the morning they have their bias, you know, they just wait for a type of confirmation and they enter, and they can actually get on with their day. When they come back from work or when they are done whatever they are doing, they check how their trade is going, whether they're in profit or loss, they close. But you know, day trading is actually quite trickier than that, because sometimes you wouldn't see a proper confirmation for entry until when it decides to show itself. And who knows, what if you're busy then? So that's why most actual workers prefer swing trading. You know, they make their decisions, you know, check the chart, and they just execute, and they just move past the whole, you know, the whole stuff. So moving ahead, what's happening? Oh, sorry. Okay, position trading is a long-term approach where traders hold positions for weeks or months or even years, aiming to capitalize on significant price trends. Position traders primarily rely on fundamental analysis to identify undervalued or overvalued assets, which technical analysis is serving as a secondary tool. Yes, so position traders tend to leverage on undervalued or overvalued assets so that they can buy when it's very low and they can sell when it's very high, so that they can maximize massively from the swing trade which they're about to engage in. So these traders know that fundamental themes will be the predominant factor when analyzing the market, and therefore make their trading decision based on them. So you see most position traders, they're mostly position traders are often called investors. So these are people now who are in the forefront of decision making, right? And when you're in the forefront of decision making, I'm sure you like the news. You know, you'll be in trend, so you know when, okay, the housing market is about to crash, the gold industry is about to crash, the oil industry is about to crash, or is about to, maybe you know that, okay, because you're in a position of making decisions and you get frequent updates, you know that, okay, 4 or 5 major companies have just invested into the oil refinery or into the oil well or into the oil reserve of US nation, and you should expect the oil, like, because those industries are billion like dollar industries, and you should expect that the US oil price will start skyrocketing in few maybe weeks or months to come. So you knowing this, you just take a position that you just take a decision that, okay, you're going to buy US oil for a very long time, and you just wait for when it's properly undervalued and you engage in your swing trading. So yeah. So what is crypto? What is crypto? I'm sure you know what crypto is, and Michael mentioned it, but let's just go through. So digital form of money, unlike fiat, which is physical. Yes. can't be duplicated or destroyed. Crypto cannot be duplicated or destroyed because it is already founded on blockchain. Blockchain is a very immutable, integrated system, which is mind blowing. So it is distributed P2P, peer to peer, from holder to a new holder using the smart contract address and the rest of them. Borderless crypto. Oh my God, crypto is everywhere, everywhere. Even some of these countries that say that they've banned crypto, crypto is still functioning in those countries. Because I mean, how do you regulate crypto? So it's protected by cryptography. It's you can research that. I'm not really a crypto person, but we did together, sha. So types of orders. We have methods of spot trading in crypto. Some of the major types of orders in spot trading includes, yes. So this is what I said. Hopefully by next week we'll be doing practicals. You'll be asked to, I think I'm going to take it up with the other instructors after this class, probably during the weekend. You'll be sent the broker, you set up the broker, and probably deposit something inside for practicals, obviously. And hopefully during the course of the practicals we make some money. So yes, yes, yes. Based on practicals, these things are very nice. When we are talking about them, we are looking at them, we are playing with them, we are taking screenshots, sending to the group chat. It's kind of interactive. And well, if you've not taken if you've not taken a picture of this call, take a picture of yourself in this call first. Take a picture of yourself in this call, your screenshots rather of yourself in this call. You'll be communicating what to do with it later, and how you could get rewarded. I don't know if you guys, everybody was here in the former class. When I was speaking with Meko, he was like, okay, let me just ask you guys so that it's not be as if I'm now doing Amebo or information is reaching me through the back. So what did Meko say he's gonna do for the 5 best students who emerge, like eventually? Okay. Buko.
Yeah, he said he was going to add them to his group for free and guide them to grow.
Okay, guide them to grow. Okay,
Yeah.
Selling. Let's hear you. Selling, let's hear you.
Can you guys hear me?
Yes.
Okay, I said according to what he said he's going to mentor them for 3 months, including provide signals for 3 months.
Oh, awesome.
Yeah, including providing free signals for them.
Awesome. So, we are going to be doing, I would love for us to be doing practicals alongside every other thing we are doing. It really helps us to learn. And the inclusiveness is very good. Let's feel included. Please, let's feel included. Where you feel that I'm moving too fast or any of the instructors are moving too fast, draw us back. In as much as you guys are like the major players, I'm sure you're already on a group. I don't think I'm in the group yet, but probably I will endeavor to join. I'm sure you're already on a group and you already have access to Kida, you have access to the mentors. So like that's already like a big plus. So inclusiveness, because he said 5. I don't want it to be 5. I want it to be 20, 25, 30. Let us feel included. Let us feel that, okay, this is something worth doing, and I believe that we are going to get somewhere. This trading industry is very massive. When we just start teaching like this and talking, it's like this one self waiting them they talk or more. it takes years and years and years of mistakes to get to perfection. But either way, it's very important that we stick to it, right? So there are different ways to succeed in this industry, but patience is key, right? Patience is one of them. Perseverance is one of them. We have to persevere. During the course of this class, let us persevere. Let us make out that time. Yes, most of us are working or most of us are students. It's stressful, it's not easy, but let us try, you know. So speaking about trying, the link. Okay, speaking about trying, take a screenshot of yourself on this call. That's one. Two, the link to the brokerage, both for the forex and the crypto will be sent. I would love for each and every one of us to download Trading View, Meta Trader 5, alongside the other apps which are to be shared. So that being said, let's continue to what we were saying. Yeah. Can we use these apps on our laptops? Definitely. I saw a question now. Someone said, can we use these apps on our laptops? Yes, we can. Not all, but some are best. The interface of some are best on phones, while the interface of some are best on the laptop. But everything will be communicated to you in the group. Let's just feel included. Let's feel the need to ask questions, draw the instructors back, because we're trying to carry everybody along. So let it feel like that. Okay. So back to our slide. Can my screen be seen? Okay, awesome. Awesome. All right. So some of the major types of orders in sports trading include limits. Sorry about that. Just give me 1 minute. Okay, sorry, I'm back. I just want to share my screen. Hold on, please. Whatever happened to my screen now? It's not agreeing to share. Okay, I think he's up now. Wow, I have very patient people. Please confirm you can see my screen. All right, awesome. So so we have limit order, market order. Probably we should be seeing more of those things in the practical when we've already installed our crypto broker. OCO, order cancel order. So what this means is that for people who do analysis and maybe leave to do something else, maybe you have a sell, you want market to sell, you have a sell bias, and you also have a buy bias. So what order cancel order simply means is that if your sell bias happens first, it should cancel your buy bias. That's if your sell position triggers, then let the buy position close. And limit order simply means, okay, what you want is that you want when price gets to a certain level, you just set your limit order at that level. Once price gets to that level, it will trigger. And that's why in the limit order, we have two types. We have the buy and the sell. We have the buy limit and the sell limit. What is the buy limit? The buy limit means when price comes to that discount zone, yeah, that's when price is undervalued, when price has come down and tapped into your buy zone. Let your buy limit trigger it to like what's the word? To initiate that position, to trigger you into that position, to open a position for you, a buy position, then the market will like go up. The opposite goes for the sell limit. When price goes to an overvalued zone, when price pushes up and it has reached your zone which you wanted to start selling from, which is your resistance zone. When price gets there, let that your sell limit which you set trigger and open your position for you. That's what sell limit does. What is your market order? Your market order simply means market is at the zone where you want to buy or sell. You just click your buy. That is, you are there. You are observing the market. You are with the market at that point in time, and you want an order to be opened. You want the position to be open. So that's when you use the market order button, either for the buy or the sell. So futures trading and leverage. So we have crypto futures trading gives investors the opportunity to bet on future price of a crypto without having to actually own or handle it. Yeah, that's what we were talking about earlier. So what what futures is that this is a type of trading that gives investors, obviously each and every one of us here are investors, but we not say you should go add investor in your name or put FX in your name. They go bill you. People who are supposed to help you, they go think say you don't bill. But yeah, I'm not saying trading or being a forex trader is not something reputable. It is, but let's be guided. So Yeah, we are investors, and futures gives us the opportunity to bet on the future price of a crypto or a market without having to actually own or handle it. So we don't own it, we just bet on it. We bet our money that, oh, USDT, BTC, ETH, Shiba, Pi, and the rest of them, they will fall today. You put your money and you short them. If they fall, you make a shitload of money. If they do not fall, you lose a shitload of money, and you rejoice or you cry respectively. Now, leverage is what allows one to potentially multiply their gains while speculating on the price of the underlying assets if the trade goes in the right direction. So leverage is just like an amplifier, right? It helps you amplify your gains or your losses, and you have to make use of it judiciously and carefully. As equally as it is good, it is also bad. Anything that has anything that has advantage has disadvantage. So futures contract is a legal agreement. Yeah, it's legal to buy or sell a particular asset. See, that's why I said we are reputable or security at a predetermined price at a specified time in the future. While traditional future contracts typically have an expiration date, crypto futures do not have an expiration date as they are perpetual future contracts. Yeah. So aside from the futures that we know in crypto trading, futures actually existed, in the past. So as betting existed in the past. So future simply means futures is betting. I'm bet on anything. Betting on anything is actually futures. But then futures trading has to do with trading of pairs and of currencies. So introduction to the forex markets. The term forex simply means foreign exchange, which is the largest financial market globally where currencies are traded. Yeah, it is the largest financial market where currencies are traded. It operates 24 hours a day, 5 days a week, allowing for continuous trading across different time zones. Major participants include central banks, commercial banks, multinational corporation, hedge funds, and retail traders. See, so we have major players who constitute this market. They say it's the largest financial market. Why? Because almost all the financial organizations engage in this activity. Yes. So if all of them are engaging in the activity, imagine the largest financial largest financial organizations are engaging in trading. So their money never do them. They're still looking for more. How much about us? You can see us now. It's us that they put in red. They put us in red as per what are they trying to imply? Anyways, so we have central banks, commercial banks, we have hedge funds, we have different financial institutions and retail traders. Yeah, the forex market has higher capitalization and money, which is about estimated to be 2.4 quadrillion than the crypto market, which is estimated to be 2.4 trillion USD. Exchange rates are determined by supply and demand dynamics. Exchange rate simply means the price at the given point in time. It is determined by demand dynamics, economic indicators, which is what I mentioned as news or fundamentals, and geopolitical events, disasters, war, and the rest of them, and central bank policies. Central bank policies is, there are still policies, rules, bills, interest rates. Those also fall under fundamentals and news, which affects the volatility of price. So trading session in Forex, I'm sure Michael talked about this. There are 4 trading sessions in the Forex market. Sydney, Australia. Sydney and Tokyo, they kind of intertwine. But nobody really talks about Tokyo anymore. Or what? No, sorry. Nobody really talks about Sydney anymore, which is the Australia Forex market. But because we believe that Tokyo, or rather the Asian time zone, is is uh is the only relevant one, because nothing really happens if you want to, because when is New York? New York stops at 10 p.m. and when is Tokyo? Tokyo starts by 12 a.m. So where does Australia actually fall under? Australia is buru. Australia is borrowing from New York and Tokyo, because if Australia is starting from 9 p.m. and ending at 6 a.m., then what is it trying to tell us? It's trying to tell us that it covers just what? Probably just 2 hours. Can the time frame be just 2 hours? So if you look at Japan, you can see that Japan covers from 12 a.m., which is usually market opens around that, say ish 10, 11 to 12. That's usually the time where we experience the highest amount of spread, broker manipulation and all. So what does this mean? Avoid trading around those period of time. Yes, fine and good. If you had a trade as swing traders, if you had a running trade, which is good in profit, yeah, and it is moving around the period of 12 a.m., is fine. But if you are awake, trading have entered your head, the only thing that you're thinking about is trading, you cannot sleep, your body is doing you want to open position, you want to hold a position, you want to do fast and trade when your mates are sleeping. I do not say you should not trade. I don't say you should not analyze the chart. It's good to immerse yourself in trading. It's good to be so, into trading, for you to spend multiple time back testing, being with the chart, studying the charts, is very nice. But avoid actually executing or opening positions between these time frames, which is the Tokyo, right? The Sydney Open, Tokyo Open, let's just stick to London and New York for actually opening of positions. Yeah. You can open the position, you can it can run through Tokyo, it can run through Sydney, but it's advisable to open your positions. I'm seeing an entry. What is the time? Tokyo session. I'm seeing an entry. What is the time? Sydney session. You under your entry. JJ. So I can say that, okay, anything from Tokyo session is even good, 12, 1, 2, the spread has already reduced at that point. So anything 1, 2 a.m., it's flexible. You can actually start looking out for positions. If you see a good confirmation and entry, you can open positions. So that's that about this time frame. So Sydney, Tokyo, London, New York. So we have lot size and forex. Lot size. So a lot is a unit measuring a transaction amount. A lot is actually what is a measurement in which we use to buy positions or buy currency pairs, because this forex that we're talking about is foreign exchange now. So imagine you have your fiat now. You have your fiat, which is your naira, and you now say, okay, I want to buy, let's say you want to buy Euro USD, because I don't know if you know how these forex pairs work. The forex pairs don't stand alone. They're always paired by the base and the quote pair, right? You can have something like Euro USD, Pounds USD, USD JPY. The first currency is always the base, and the second one is the quote pair. So you have the base currency and you have the quote currency. Yeah. So currencies don't stand alone. So what when you hear USD JPY, it simply means that you're buying USD and you're selling JPY. Right? When you hear pounds USD, it simply means you're buying pounds and you're selling USD. That's what it means. So that's actually how these things roll. So a lot is a unit measuring a transaction amount. When you place orders, I'm sure that you all have taken your screenshots of this follow, because it's part of today's Friday. After Friday, what happens? Assignment and quiz. Take your picture, be your screenshots of this call and keep it safe. It's good to be obedient to, so that you eat benefits. So a lot is a unit measuring a transaction amount. When you place orders on a trading platform, orders are placed in sizes quoted in lots. Yes. So when you're placing orders, okay, sorry, I was saying something before I deviated. You have your fiat, which is your naira or your USD, and you want to buy, you want to bet on Euro USD. Let's not say buy. Yeah, you want to accumulate some, you want to do some foreign exchange, you want to do some futures thingy, and you have your fiat and you want to capitalize on Euro USD. You predict that Euro USD is going to go up, and you want to throw in some money into Euro USD. You don't just use your current naira and say, oh yeah, let me change it to Euro USD. You first of all understand that you have to buy Euro USD in the lot categories. You buy it lot by lot, right? So Euro USD now is infinite. It is plenty. It is a lot, right? So your fiat, your currency cannot be directly proportional to Euro USD. Your fiat is directly proportional to your lot, then your lot is directly proportional to your Euro USD. So let's say you want to buy Euro USD or you want to sell Euro USD. I'm sorry, I might be sounding somehow, but with time, we are going to understand it. Probably just with one or two practicals, because all these things that I'm explaining now, practical will solve it once. Once I open my MT5 now, I fund with $10. I go to my Euro USD. The next thing you see, I want to buy Euro USD. They will ask me for how many lots. How many lots do I want to use to buy Euro USD? I can tell them, okay, I want to use 1 lot to buy Euro USD. I can tell them I want to use 0.1 lot, or I can tell them I want to use 0.01 lot. So those things I just mentioned now are standard mini and micro lot sizes, right? So I don't really know if you're going to dig this example which they gave, but I'm saying it's the same with forex currency pairs. You can't just buy 1 unit of currency. Instead, you buy a lot. See what I was saying? You cannot just buy one, because it is impossible. It is not done that you just go and you just use your naira now or your dollar now to go and buy currency, or to go and buy 1 unit of a currency, because you're not just buying a currency, you're buying a unit of a currency, because these currencies are paired against each other. So instead, you buy a lot, right? You buy a lot of that currency. And now they said we have lots are subdivided into 4 sizes. We have standard lots, we have mini lots, we have micro lots, and we have nano lots. I don't know what nano lots is, and probably that nano lot will be used in terms of cents, right, or whatever. But the major lots we have is standard, mini, and micro. So what are the standard, mini, and micro lot sizes? The standard lot size is simply, you can just say it is 10. You can say it is 10. So remember I said that currency moves in pips, right? Currency moves in pips. So if your currency moves in pips, it means that if your currency, which is, let me say, which one am I going to use now? USD card. If USD card now moves in 5 pips, it move 1, 2, 3, just like a human being move 1 step, 2 step, 3, 4, 3 step, 4 step, 5 step. your currency now, maybe your, what did I call it again? Your USD card move 1 step, 2 step, 3 step, 4 step, 5 step. It is now what? 5 pips, right? And your standard lot is 10. Standard 10, mini 1, micro 0.1, standard 10, mini 1, micro 0.1. Now you have your pips. Your pips is each movement of your currency pair. Now your USD card move 1, 2, 3, 4, 5. Now, what will be your lot if you used the standard lot to say, okay, let me your prediction now. Now we are doing the futures, right? Future movement. Now we did not know that USD card was going to move 5 steps forward, but maybe you had done your analysis, your technical analysis or whatsoever, and you're like, okay, I want to bet, especially, okay, people who 5 pips is very little, 1, 2, 3, 4, 5 is very little, so that would be something scalpers would majorly eat. Scalpers can eat anything between 3 pips, 5 pips, those are very small price movements, and scalpers do well to capitalize on that. Okay, let's say I'm a scalper now, and I say, okay, I want to capitalize, or I want to invest, or I want to bet that USD card is going to move 5 steps forward, and I want to bet that thing now. I want to bet it now with standard lot. Yeah, you already have your naira or your dollar or whatever you have in your currency funded, and now you say, okay, I want to bet this thing now with standard lot. I want to bet that USD card is going to move 5 steps forward. Now, 5 steps forward means 5 pips, but using standard lot, which is 10, simply means 10 times that 5 pips which your USD card moved, and that is 50. Simple. And that is what? That is 50. So now, you using standard lot size, your prediction that USD card is going to move 5 pips forward being accurate, you're now able to do what? You're now able to make 50 USD or 50,000 naira, depending on whatever currency that you're using. So that is how lot size works. Let me take questions now, because I do not want to move on, even though revisions are still going to be done, but please, the questions coming about this lot size, because I know that okay, I have a question about day trading. So let me take questions about the lot size. Let me take questions about the lot size. Then the person that has questions about the day trading should also come in. No questions. So you all understood how the lot size works. And I just use standard. So coming to mini is 1. So if your currency pair moves 1, 2, 3, 4, 5, it simply means 5 times. It simply means 1, which is your mini, which if you decided to use mini lot size, it simply means 1 times 5, that 5 pips, which means $5. So governor, yeah, can speak.
Sorry, I wanted to ask a question. You talk about PIP moving 5 times, like if it goes 1, 2, 3, 4, 5, I've made profit. So what if, let's say, it moves 1, 2, 3, and then it comes down 2, and then goes another 3? Like, I want to know, like, if those retracements also like counts, like removes the addition. You understand my point? That's just what I want to know.
Okay. Now, that's a very brilliant question. So we have a movement of 1, 2, 3, 4, 5, right? Market takes a retracement. It goes back. It goes back 1, 2. You're now left with three. You're not left with only 3 pips movement. If you decide to close at that 3 pips movement, if using a standard lot, you've made only 30 USD. But if you decide to close at the 5 pips, using that standard lot, you've made what? You've made 50 USD. If at the point when you enter that trade, market goes back 10 pips, which simply means 10 moves in price movement, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, backwards, you've lost 100 USD. So the addition and the subtraction, they all count. So that's why it's very important for us to minimize our lot size. We are based on your position sizing, which brings us to risk management. Yeah, based on your position sizing, those are what would determine your lot sizes. Yeah, it does. Your position sizing will determine the lot size for you to use. Right? Okay, let me do this. Let me go to my chart and show you guys something. Which one is this one again? Okay, let's hold. Oh, can you guys see my screen? Can my screen be seen?
Yes, sir.
All right. So now look at this. Let's say this was supposed to be your position sizing, right? Here you have, this is a buy position, right? So I'm expecting price to get here. This is my take profit. I don't want price to go below here. This is my stop loss, right? Now,
That's your screen. Sorry. Okay.
my take profit simply, please mute your speakers. Please mute your. Okay. Let me carry on. So this is my position sizing is my position sizing should be, it depends on your stop loss directly impacts your position sizing. It directly impacts or it directly affects your lot size, right? So if you can look here, you're going to see something like this. That thing now that you're seeing. Oh shit. I don't know if this thing, I wanted to show you. Okay, Sha, you see my stop loss pips. My stop loss pips is 33.02, right? My stop loss pips is 33.02, and my take profit pips is 339. So that being said, if I want to take my lots now, if I want to take my lots now from this trade, right? I can use this tool to measure my stop loss. So these are around 34.76. Let's just say 34. So I'm saying if I want to enter this trade now and I want to determine the lot size which I'm going to use, I'll consider that my stop loss pips is 34. And if I use the standard lot size, which is 10, the standard lot size, which is 10 times 34, wouldn't that be really massive? That's going to be about 340 USD, right? Which I'm not going to reach that. I'll bring it down. I'll say, okay, let me use my mini lot size. Even though, let us simply check it from here now. This is another way to check it. Now we have our entry 4044.23, our stop loss 4011.21. Now, counting from the first digits, after the first digits, 1, 2, 3, 4. 1, 2, 3, 4. So we'll simply subtract this from this, which is 4423 minus 1121. You can see what it's giving us here. Can you guys see it? 4423 minus 1121. Now, what does this mean? This simply means that let me not be using all these things. This simply means that from here now, from this entry point now to this stop loss level now, market has moved 3,302 pips. Right? It's simply plus and minus now. If from here now, markets move all the way down to this place, now it simply means you subtract what is here from this one, then you get how many or how many times it has moved. Now, if you subtract 4044.23 from 4011.21, you see that market has moved 3,302 what? Pips or times. Now, for each time market move is each pip. Now, if you can look at it here, you see it 3,302 pips is what market has moved so far. So if you wanted to make your decision now, obviously you start with something as low as 0.01, which is the what? Which is the micro lot size. Now 3,302 times 0.01 is going to give you what? It's going to give you 33.02 USD. So for you to successfully enter this trade, with the least lot size 0.01, you need to at least have 33 USD or more. At least you need to have at least 40 USD for you to be able to enter this trade. So you see that your lot size is directly impacted by your position size. So this is your position, like this is your stop loss, this is your take profit. And you're seeing that, okay, your stop loss now is 3,302 pips. I don't know if you guys are following, but your pips now from here now to here now is 3,302. Do you understand? And if you want price to actually move up to this zone, you want to capitalize on this movement, at least you should have at least 35 USD in your account. And now for persons, because gold is very volatile, you know, and now for persons who don't have that kind of money, just avoid this type of trade. You know, we still have something like pounds USD. Pounds USD is a type of trade that is a type of pair that doesn't require so much like volatility and all. So you still have other types of pairs which you can successfully trade. So I don't know if I was able to pass any information or clarification from what I just said. Governor, is your hand still up? Okay. Well, I think I'm just going to finish up the slide, then conclude with questions for this night. All right. Okay. So we're talking about, where were we? Lot size. Yeah. So we lots are subdivided into 4 sizes. We have standard, we have mini, we have micro. Standard is 10, mini is 1, micro is 0.1. Yeah. So okay. Yes, so yes, it's actually 4. So sorry for that confusion. I'm confusing myself and confusing you guys. No vex. So standard is 10, mini is 1, micro is 0.1, and nano is 0.01. Micro is 10, mini is 1, micro is 0.1, and nano is 0.01. So these lot sizes are all here for our use, for our enjoyment, you know, depending on your account size and your stop loss pips. You know, these are all the things that like contribute to the lot size which we eventually decide to use, because you cannot just tell me that you're trading and you're using any lot size anyhow without any actual reason why you decided to use that lot size. So to give traders more control over the amount of exposure they have, and calculation profit and loss, we just did that. To calculate the profit and loss of a position, what you need is the position size and the number of pips the price has moved. To the actual profit or loss will be equal to the position size multiplied by the pip movement. We've done that for example, yada 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 yada. So risk management in forex. Risk management in forex is still the same thing I spoke about earlier. If you know that you are trading only a $50 account, and you decide that, okay, in this $50 account now, if I trade if I risk $5 per each trade on this my $50 account, I'll actually have 10 trades or rather I'll actually have 10 opportunities to trade, and let's say you have to had lost those 10 trades consecutively before that account will end up to the dust or to the trash or end up blown, right? So that's risk management. Risk management simply means you managing your funds to live to see tomorrow. So you won't say that, okay, because this setup looks so nice, because it's gold, I want to risk my whole $50. I go NACAM 0.02 and it's going to give me 800 USD. You will now risk your whole $50 on just that trade. And what if the trade goes against you? Because you cannot win all. And your no matter how good you are, sometimes the market can decide to just act funny. Or it could be an oversight. You want to press buy, you go and press sell. So all these things are things that happen. And if you're not maintaining risk management, you will just see yourself struggling unnecessarily when you could easily use $5, try $5 two times, even if you lose the $5 twice. The single one that you're going to win could give you $20, $15, $25, $30, and it's going to cover for the losses and still give you profit. So that's just risk management for you. All this big grammar that they're speaking here. Risk management in trading is the process of identifying, analyzing, and controlling potential losses to protect trading capital. Right? It is a fundamental part of a trading plan that and helps traders make disciplined, logical decisions instead of emotional ones. Now, why you see most of our brothers in trading, they hit rock bottom, they go through depression. Some few now, because almost everybody is now woke to risk management, and this is something we teach. We try to emphasize on all these things, especially risk management. So emotions are there because this is money. You're taking risks, and you're not just risking anything, you're risking money. And it can be heartbreaking sometimes, heightened emotions, emotional states, and the rest of them. Fear of missing out, blah, blah, blah. But when you have a good risk management habit, you find yourself in a space where those emotions will be reduced, you'll be more comported, you'll be more controlled, you'll be more focused, you'll be more calculative. Because why? You're just risking a very small or a certain percentage of your account, which you know that even if it goes against you, you still have a lot more from where that came from, or at least few more from where that came from, to still have a go at trading and still execute your trades, provided that you have a winning strategy, which we'll still be talking about in week 3, week 4 of this session. That's when we'll do some intensive, strategy talk and analysis. That's critical technical analysis and the rest of them. So we have effective risk management strategies involve limiting exposure on individual trades, managing emotions, and using tools to minimize potential loss. We are talking about the types of lot size here. And we have blah, blah, blah. Take profit using standard lot size and the rest. I don't know what these people are saying here. But thanks for attending tonight. Got any questions? This is what you should do. Tweet about what you learned at this class on Twitter and attach the screenshot to it, tagging our official Twitter handle. Use these 4 hashtags on your tweets. I'm also going to send you 2 more hashtags to do. Just take a what? Take a photo now. Take a photo now. Just highlight key concept of things you learned. Just like 3 or 4 key topics or 1 or 2 things which you picked up, which you didn't know before, which you got much more clarification on this night. Tag Gida. Tag Gida. Tag me. Tag Gida, tag me, tag Kevin. Tag Gida, tag me, tag Kevin. On Twitter, tweet now. They say tweet about. So Twitter, I'm attaching my username, and I'm also attaching the founder of Gida. I'm attaching his username for you guys to tag him also. Yes, this is question and answer session. You can also tag lead technical analysts. Yeah, raise your hand and ask your question, please. Or rather, just go ahead. This is supposed to be an interactive class, by all means. By all means. Ask your questions. We are at the end of this session. So, Celine or Richa, Adobe, yes. I'm all ears.
Ahead now. Hello?
Yes. Yes, speak louder, please.
Okay, when you were explaining something on the chat, you said that our stop loss affects our lot size. So I didn't get you well. Can you please explain more what you meant?
Okay. Now, your stop loss has a pips attached to it. Celine, just unmute yourself so that we can have this conversation. I'm sure everybody else will learn from whatever I'm saying and whatever you just asked. So mute yourself, Celine. Yes. So I said your stop loss has a pips attached to it, right? Did you get that?
Yes, I did.
And do you know how to calculate your stop loss pips?
Not really. But then you said how to calculate pips is price movement, like if it moves to one.
Yeah. So from wherever you want to take your entry, even though most of these things might sound vague because we've not really done practicals on it, but from wherever you want to take your entry to your stop loss, you just have to minus the, you know, the current price of the market from where you took your entry or where you want to take your entry to where your stop loss is. You minus it, then you get that figure. Then that figure now is your pips of your stop loss, which means if market now moves, I told you one pip is one movement of price. So if price or market moves from your entry all the way to your stop loss, whatever amount or whatever, whatever number of times it has moved is your stop loss pips, right? Now, let's say your stop loss pips is 100, right? It simply means that with your mini lots, if you're going to use a mini lot now for that trade, right? If your stop loss pips is 100, it simply means that using your mini lots, your stop loss has to be on your losses. If that price gets to your stop loss, your loss is going to be 100 USD using a mini lot. Using a standard lot, which is 10, if your stop loss pips from where you want to enter your trade to your stop loss is still 100, using your standard lot, which is 10, that's your 100 pip stop loss now times your standard lot of 10 will give you what? 1,000, which means you'll be losing 1,000 USD if your stop loss hits using a standard lot. Now, how can you manage your lot size to use in this kind of situation? You consider using your what? You consider using your micro lot size, which is what? Which is 0.1. Now, your stop loss pips is 100, Abby. From your entry to your stop loss is 100. You're now like, obviously, we don't want our stop loss to hit, though. We want our take profit to hit, but we can never be too sure. That's why I said your stop loss pips affects your lot size, right? Now, your stop loss pips now, we've estimated it to be 100 times what? 0.1 as a what? As a micro lot size, 0.1 is 10. So using 0.1 lot size or 0.2 or 0.3 or whatever, it's can you hear me? Sorry. So using 0.1 lot size, you can actually minimize your risk. You can actually minimize your risk because you will now be losing just $10, which means 0.1 times your 100 stop loss pips. You're losing just $10. You understand? Then going as low as 0.01, you'll be losing what? 0.01 times the estimated 100 USD. Oh, sorry, the estimated 100 pips for your the estimated 100 pips for your stop loss. So that would be giving you just 1 USD. So I don't know, was I able to explain that? Selling.
So like if someone wants to start out, which lot size do you advise? Is it nano or micro?
You can use anyone. Simply depends on your account size, right? Depends on your account size. Don't worry, Celine. Just keep on bringing this question about lot size, and as we delve into, you know, sharing screen on the charts, that's when you get to understand it better, because for everything we analyze here, we always talk about stop loss and take profits. And therefore, we're going to calculate the lot size and you understand it better. All right. So any other?
Hello, can you hear me?
Yeah.
Okay, my question is about the task you gave us to do. Is it
Okay.
our assignment for the week, or we still have another assignment? Or you still give us another assignment? And is
Yes.
there any time frame for this task, like deadline for it?
Now, I said now to do now, like now.
Okay, now.
just
Oh,
just
okay,
minimize,
okay,
I just said key points, right? Two key points. It could
okay.
be, you could say you learned about lot size, and you learned about spread, that kind of stuff. Then you just tag. The assignment is coming up, we're going to do that and communicate with you back.
Alright.
So just do it. Then after doing it, uh share the evidence that you've done it on the group, on your group chat. Okay. So any other person, any other question? We have 5 more minutes to go.
Yeah, good evening, sir.
Good evening.
Yes, my question was on that take profit stop loss, but from the answers you gave to Celine's questions, I understand to a far extent. So I believe with subsequent classes I'll get more understanding because we don't have much time. Thank you.
Awesome. So I hope to see you guys soon. I remain Prime, your friend, and whatever you choose to name me as. So, okay. See you next time.